Okay, we are live. Prospero.ai stock market live stream 3 p.m. December 20th. Our last live stream before the holidays. So, happy holidays, everybody who's watching this. Thanks for joining us. Um, I was all set to come on here and just say, same old, same old. The market's just like melting up towards the end of the year. Everything looked bullish, but then I just checked a few minutes before starting, and the market is kind of taking a bit of a tumble. So that's a little bit of a new development in the market today. But as we always start off, we start off with the market update from George. So maybe you could share a little bit of insight on what's happening today in the markets for us.
I mean, we will look at the technicals more for sure. When we jump into the actual thing. But yeah, like I'm gonna look for more. I'm not seeing anything really um on option sentiment yet. I mean, we did see QQQ net option sentiment. Um, definitely like leading into this. Uh like dipping a little bit this week, but then, like going back into our bull zone. But we definitely will be, looking at that, monitoring that, um, because it's definitely like, we'll look how it ends the day and see, but we're definitely seeing like what could be a correction, what could be, again, I think we were probably getting a little too bullish, but I was kind of leaning on the signals a lot in terms of um just like what was saying like, hey, like I do have some macro concerns, and like, but this is like, some pretty extremely bullish activity. But yeah, we'll see. I do think based on like what I just saw in terms of like net option sentiment that that we this might just be a little correction, and we are seeing it come back a little bit. um, but yeah, like we'll look at the end. I think without a doubt, I'm gonna do the thing where I like hack off some longs at the end of this. Um, just because like this is enough to concern me, but we'll definitely look at what net option sentiment is doing. We'll look at a couple other things. Um, but yeah, for now, I'm not ready to like just because everything's been so bullish, I'm not ready to push the panic button yet, while at the same time saying like we were going to get a correction sooner rather than later. So, like, is this a correction? Is this something you know, that's actually just like the start of a trend, back downwards, where it's just like, I think one of the things that I said about the Santa rally, like yesterday in the trading letter, was that, like, yeah, like you should watch out for the Santa rally ending right after Christmas, sometimes maybe sooner. So what we could be seeing, and I will check the consumer like index when you're doing like I always forget what it is. Oh, I could actually probably like look at that in the sector analysis. Um, I will end up looking and seeing like updating the sector analysis. Um, so we can take a look at also the technicals on consumer discretionary, because actually the main thing when I just pulled this up that I'm seeing um is like problems in real estate, consumer defensive, and utilities. Um, but we'll definitely take a deeper look um, when I do the portfolio update.
Yeah, so first of all, thank you to everybody who liked the video. I see a lot of likes coming through, and that helps us out. It helps YouTube spread our live stream. So thank you for liking, and people that haven't, if you could like it, that'd be awesome. But so the only follow up after this is obviously, we've had like a ferocious rally, so of course there's going to be some pullback eventually. So I don't, like you said, I don't know if you have to be too worried about this, but the steepness of the move today and the like quickness of it, like did all the institutions like signal, all right, let's sell at like whatever it was, 230 or something? Like why did any idea why it happened like so quickly?
Yeah, I mean it's the kind of thing we always warn about, like when we talk about like meme stocks and like rug pulls and things like that. Like a lot of these are just basically like circuit breakers at this point. When you're just talking about like the algorithms, like yeah, maybe it started to pick up some momentum. some humans decided that they also wanted to take profit. We've talked about it. Maybe it's even like a couple hedge funds just being like, oh, are you thinking like we need to pull the plug on the Santa rally? Like, yeah, I'm a little worried that we've hit the top too, and then that chatter just starts moving around Wall Street. And then all of a sudden, that like chatter, you see the first little dip and everybody's like, oh shit, it's happening. It's like finally hit a fever pitch. And then other humans do it. And then the machines start to pick it up because they're picking up these like small changes and everything. Um, so yeah, it's definitely one of those things that like I think circuit breakers are the right descriptors there. And I think, that's just what happens. And I mean, that is the nice thing about the way that we've designed the signals a little bit, where it's just like there's an element where like this kind of behavior makes it kind of impossible, I would say, for humans to trade like short term unless they're literally watching the markets the whole day. And like I do know some people that are successful doing that, but I do think it requires like that much like attention and like kind of like an amateur slash professional type approach. Um, but like I will also say that like that is the kind of thing that we also capitalize on. When we're looking at things like the direction of the options markets, like those kinds of trends, like the catch is that like it's automated and very hard for like a human to catch up unless they're in it. The nice thing is because it's so automated and kind of like you expect that performance and there's kind of like a bit of a pattern to that machine behavior that we can also start to flag it as it starts to develop in the options markets.
So one of the companies that there was a bunch of stories circulating around today was the biggest one, Apple. So the first thing that came out today was that they're actually going to have to stop selling some versions of their Apple Watch because of a patent dispute with a smaller company about one of the health tools that they provide in it. But I wouldn't be too worried about this if you're an Apple owner, because there was also another story of a Wedbush analyst came out and said that Apple is going to be the first $4 trillion company next year in 2024, which would be a 30% gain. They're just over 3 trillion right now. So, how do you feel about Apple about hearing those two stories?
I mean, these kinds of things, like as probably talking to me for a while, that like I always think like the truth kind of lies somewhere in the middle. But like in terms of just like an analyst like analysis of like what might be the truth, like I think the watch is kind of reflective of what I would call the real story, which is that like I just don't think Apple's products are like as strong as they used to be in terms of like the kind of gains they could post and the kind of dominance they could have just by virtue of being Apple. We see like in these shrinking sales that is like literally not true. That it's just like you don't get to grow just because you're Apple anymore. And they like need to have some more like products. But like on the other side, I honestly think that's what people like absolutely hate about Wall Street analysts and like looking at them sometimes because it's just like I don't like to buy into much of this much of this narrative because it's a real victim mentality where you're just like, oh, like because like there's a few people like trying to taint stories, like it means like I can't be a successful investor. No, everybody's still capable of being like, hey, that story's tainted or that piece of information is tainted. Like, what's real? How do I do real research? But I read something like the Wedbush thing, and I'm just like, oh yeah, Wedbush analyst. I'm sure like you and your friends are all long Apple, or like, you've been told to like plant that story and whatever. Because there is absolutely no basis for Apple gaining 30%. Like, unless you like couch it with being like, I think the whole goddamn market's going to be up 30%. Like, which is fine. Like, if you're just like, hey, the market's going to be up 20% and I think Apple can gain 10, I think that's a perfectly appropriate thing to say. But if your general thing is that like Apple is going to gain 30% and that's going to be like a big thing and that's a news story, like, there is like, why would a company that's shrinking in sales like go up 30%? Like, that is what really pisses me off because the same thing that pisses me off about retail investors doing it. It's just like, what is your basis for saying that? You're not explaining it. You're just putting out like the whatever bullshit that you want to hear, like counter story your friends want, like whatever it is. It's just like very, very annoying to me when people do that because like I didn't read the story. I don't need because there's not like, sure, you can say like, oh, like Apple might release this new thing or that or whatever, and like there's a might to that, but there's no basis to like confidently say Apple's going to be up 30% next year, unless, as I said, it's just like, oh, like that's because the market's going to be up 25%. And at that point, Apple being up 30% isn't the story that you should really be talking about. It's that you think the market is going to be up 25%. Because, like, if the market is going to be up that much, then yes, uh, then I'm sure that there's companies more worth talking about that are going to be up a lot more than 30% in that instance.
That's exactly what I was going to add. Like, if the market's up 25%, there's a lot of IWM stocks that are probably going to be up 50% in that time frame as well, more than Apple.
Yeah, exactly. Why are we talking about Apple if
Yeah,
that's the case? Like, but it's just like, yeah, like I think to like put a bow on it, like it is that there's just like there's nothing that's that special for like what Apple is doing right now. Like, and that always wasn't true, but like right now, there isn't anything that special that Apple's doing. Like Apple, like, Apple, like for a while, and you could say this about Microsoft for a while. Like, but that's not true anymore. You could just be like, Microsoft is just like pushing out their stupid Windows shit and like, making a fine living off that. But they're not a company that anyone should be like that excited about, 30% excited, especially if you're using that as a compliment. But on the other side, like, Microsoft's doing some pretty awesome stuff. So like I like actually make fun of them as old Microsoft. They're doing some exciting stuff now. But like Apple is that way. They're just pushing their old shit on people and trying to get like people like honestly, like if they didn't have their like iTunes like monopoly, like Apple Store monopoly bullshit, like where they're basically like leeching 30 like a third off apps for like basically you know this monopoly where they're just like not really adding like that much value at all, which by the way I'd also say is a inherent threat to their business that we don't talk about enough. Like the day that either people start getting off that platform or start saying like, you know we don't think we don't think what you're offering is any good. Like, and I actually like this is one thing I like about what Elon Musk is doing like with X or like whatever, but that was one of the first things he talked about was he like pushed people to like upgrade on the web so you don't have to pay Apple's ransom. And like I think that like they should be like I'm saying, if they didn't have that, you'd be talking about like a business that was shrinking pretty fast. Like now, I would say.
yeah. So spinning from, it's funny. Went from like an innovator to like a legacy company. So spinning to other legacy companies, big banks have been just not appreciated. Their stocks have not done well over the past year. I know you were like trying to find new sectors that maybe weren't liked for next year that could rebound, and I was going to ask if big banks you think could be one of them.
I think banks are like the toughest stocks to like analyze, to predict. And I'll tell you the central part of that difficulty. And it's something that everybody knows. Like I like obviously worked at Bear Stearns way back in the day, but I did turn them down to return because I didn't really like what I was doing as like a young sophomore in college. But you know, when you look at say this consumer credit thing and even just like interest rates, right? There's a side to it that is like, oh, well, all of these businesses are generating higher interest rates. So like there's more money. And then there's the other side to it where it's just like, oh, that there's like more defaults. And there's that kind of like push pull that's like really extremely hard to analyze well. And I'll do you one better because I actually used to analyze like the balance sheets of these banks and look at their assets. So like I've gone pretty deep on this, and like that's why it's just like it's one of those things that there's some things that you analyze more and you're just like, oh, like I have more confidence I can actually like do this now and like odds make it. And there's some things like that where like the more layers I peel back, the more I'm just like, this is impossible to forecast and I don't want to do it. And I think Silicon Valley Bank is the perfect example of that, where it's just like, as I've talked about before, like there was basically like like a counterparty alarm sounded, where it's just like people were analyzing Silicon Valley Bank's collateral. And it wasn't actually until like one of these banks like sounded the alarm to like Peter Thiel among other people, that was just like, oh damn, we're really concerned about like the collateral at Silicon Valley Bank. But like to give you an idea of how big this problem that I'm talking about is and how difficult, Silicon Valley Bank themselves didn't even understand how bad their collateral was. So that's like the perfect example of how tough that is. And like when we get into collateral, it's just like it's looking at the entire risk profile and defaults. And essentially what was going on with Silicon Valley Bank is they weren't like marking to market well, which is like getting a good current value of their securities for a lot of these like actually quite idiotic fixed rate interest rate hedges that they were engaged in. Um, and like especially as rates continue to rise, that's like it does tell you how dumb they were to not figure this out because like yeah, like that's like a really elementary thing. If you talk to people in like risk management, whatever, it's just like if interest rates are going up, you do not want fixed rate interest rate hedges because I hope for obvious reasons. But just to belabor the point for anyone that might know, it's because you might be locking in something where you're getting paid, 4%, and then like you actually have to borrow new capital at 8%. Like which is like literally how like I think some of the numbers like started to work out, but it probably wasn't that bad. Um, but like that's the mechanism, right? So basically the big lesson in what I'm saying is like when I like, and basically like Goldman, like there's this there's a saying on Wall Street where you don't do business with Goldman. And like the rest of that is like you don't do business with Goldman. I actually met the guy, Mike Dubno, who made something called SecDB, which is their universal security database. So basically, like what Goldman can do and some other banks now, like Mike Dubno actually made Quartz, which is Bank of America's system too. Um, but they can just basically like yeah, we got some other language in there. I think maybe Greek, which I'm just a little embarrassed to say that I don't know. Um, Got to translate that user. I don't know how to do that, but I'm embarrassed if that's Greek and I don't know it. Whatever. Uh, and and basically it can suck in all of like basically the assets, liabilities of like a bank, and basically like create a risk profile from that. But that is all to say that like I can't do that. I'm even a really good technical person, and like I don't have the time to build SecDB or like really like the time to just like circle through and like create something that like slowly analyzes the risk reward profiles of like all this stuff. So like yeah, that's what it would take to analyze a bank stock well. Really understand um really understand what um what is everything and like what the risk reward profile is. um so that's why I don't touch bank stocks, because like to really understand if I'm investing in a good bank or a bad bank, or like how much risk I'm investing or reward on upside, for even something as simple as like, hey, I don't know how much default risk in like in personal credit or like auto loans or anything that I'm exposing myself to without doing a whole lot of work on like the bank. Um, so like that is the biggest reason I don't like to touch bank stocks, because like to really understand what you're risking and how they even like compare to other bank stocks in their sector, you have to really analyze their asset base. And I'll do you one better in terms of this counterparty risk. It's like when we always talk about like one of our big rules is know what you're up against, right? So like why would I compete with like another large bank that could be making a bet against a competing bank that they have like really good information on their asset pool? Why would I ever, or to like put this to you, why would you ever think that you had a better view on like what's overvalued or undervalued than these people that literally have access and means and tech to tell them exactly how much those asset liabilities are and liabilities are worth, and the extent they might have like a risk reward set up as a result of that.
No, those seem like all good points. But our next topic is one I wanted to ask you specifically because you're a native New Yorker. So a lot of people were saying that New York has been the finance capital of the world basically, but it was losing its grips with like Miami and some maybe overseas cities even taking some of it from New York City. But I saw the story that Prada was buying a building for $425 million right in the heart of New York City, and I wanted to ask you, like, what do you think the future of finance in the world is? Is it going to be New York forever, or for our lifetimes, or do you see it going somewhere else?
I mean, I think if you're talking about like finance, yeah, it's New York. If you're talking about like yeah, other other like maybe like I think there's a legitimate debate on like London or Hong Kong or like Tokyo in terms of like what is like and you look at the real estate prices and you're probably talking about Hong Kong as like, the most expensive city. At the very least. Or actually I think there's like a Swedish one or something. Like I don't know. Like actually they do that like most expensive cities sometimes and I'm always surprised. But finance, and it's exactly like it actually connects very well to our last topic. It's because there isn't Goldman Sachs in like another country, and like there's not even something close to Goldman Sachs in another country. Like yeah, like in terms of like international, like you've got like you've got kind of like Nomura, like the Japanese bank that's got a pretty big like Chinese banks like while powerful, they don't play enough with other banks that they could even be like one of the things that makes Goldman is they have their like fingers in a lot of international pies too, and they're like building and structuring like securities like all around the world. Um, but yeah, I think that I definitely think that because it's like it's that tech. It's like what we talk about. It's data. They have better data. They have something like TechDB, like TechSecDB, where they've just been like ingesting into that securities database and like grabbing a bunch of data and trader information and everything like that, and everybody's coming to them to like structure these transactions. Um, but yeah, I mean, it's not even that. I mean, this is not something I stay as up to date on as I used to. Um, Actually, let me just take a look. It's a good thing to look at. Um, yeah, like the largest banks in the world are J.P. Morgan Chase and Bank of America. And like as I mentioned, you probably have to put like just because of like who they like, they're not as large, but in terms of like how heavy they hit um in terms of like tech, like you're probably going to put like Goldman Sachs and probably Morgan Stanley um up above well like at least in the top 4. So yeah, you're talking about like I would say like the 4 most like I would call them powerful, influential, like maybe you look at in terms of their like capabilities um at the top before you even put those Chinese banks. And then like yeah, as I'm talking about, you have 2 Chinese banks, 3 and 4. Um but like the problem with those and an Indian bank actually 5. But the problem with those is even if they have the size, they don't have the tech, and like they don't have the data. And like to our point, some of that data comes from uh just like a long history of like international relations, doing business in a lot of other countries. That it's just like that's the problem. No insult to China. China doesn't even want to do business in all the countries that we do. And like, yeah, like by the other token, there's a pretty big hole in Chinese data for our banks. Um, but actually, to my knowledge, I'm pretty sure Goldman Sachs does like a decent amount of business in China too, just because like everybody does business in Goldman. And like the bottom line is like, when you're talking about like, and here's like the way that you can even talk about it. Like in the mortgage crisis, who owned a bunch of like really shitty mortgage securities? Like China did. China owned a lot of those mortgage securities. And like, we don't own as many of their mortgage securities during their real estate crisis. That's not like bringing down our economy in the same way. But it's certainly like our mortgage crisis hit them pretty hard. And they were pretty pissed about that too. Um, because that was like, it's like, hey, you guys got defrauded like right along with the American people.
Well, speaking of China, Xi Jinping just was at a summit in San Francisco, and he like deliberately told Biden, "We plan on reunifying with Taiwan." And I wanted to ask you, like, they are going to do this essentially, is what they're saying. So when it actually happens, is the market still going to freak out the same way it would as if the market was uncertain if they're going to do it?
Oh man, I like one of the things no one does like extreme passive aggression like China does. Like what a statement right there. Like just this like nice peaceful like describing a military action because it's like you know we know Taiwan's not just gonna like voluntarily unify. So it's just like this like oh we're going to unify thing is just like that's something that like China does like better than everyone. And just so people know in terms of like even just like why they might do that instead of that is like China, like all of these totalitarian regimes love to pretend to their own people like they're the victims, like oh like we just want to reunify with Taiwan and like everybody's mad at us and we don't know why. Like they sell that BS to their own people. Um, and like, yeah, they just like they love to do stuff like that, and they're very good at it. So I'm always just like, sometimes I just have to hear that. I'm like real tip of the cap because like we as America would love to do that. Only like our leaders are like not that tactful. They're always like putting their feet in their mouth. Like, who knows? Like it could be like you never know with our leaders. Like it could be like because they actually want to speak to the base, or they could just be that inept or out of control of their emotions or senile or whatever. Um, but but yeah, like sometimes you look at China and you're just like, oh man, everything is just like organized, like to a perfectly like well-oiled machine statement. Like they're sending the exact message that they want to send, like pretty much always. So in some ways, like I got a lot of problems with China, but like they're like the way they just like handle themselves in terms of just like their demeanor and poise and how they speak about these things. It's very it's it's a display of leadership um that we used to see in this country that we no longer do.
And just hitting on our last topic, and then we'll go right into the model portfolio. So there was a survey that showed that companies in 2024 are planning to spend more on AI than cybersecurity, which I found kind of interesting since we've seen a couple breaches of cybersecurity in the past year. And I was wondering if you think that's the right balance, and is that hype in AI, or is that something that you could see continue?
Well, first, like depending on like how that spending looks, like, and we've talked about this, there are some overlaps between AI and cybersecurity. The best cybersecurity you are going to get is going to be run by an AI. Like, and like a lot of the battles now in terms of China penetrating our systems and us trying to stop them, those are AI battles. Like those are AI systems that are penetrating are like, it's not a bunch of hackers sitting in the room anymore. It's basically like these like insidious programs that are trying to like penetrate our systems. And like anyone that doesn't even know wants to Google something fun. Um, there's a virus called the Stuxnet virus that was created by the US. That is basically an AI that was designed to penetrate as many systems. Like there is like it is very unlikely that you do not have the Stuxnet virus on your computer. And some of the things are people like worried about, like, but anyway, what they did with the Stuxnet virus is it infiltrated like an Iranian nuclear facility, and we made the centrifuges that enriched uranium spin so fast that we broke them. So we used like the program that actually broke the centrifuge was a program that we just sent there. That was something that we built once we realized we had penetrated the system. But the Stuxnet virus was essentially an like something that was designed to just like penetrate, get in as many systems as it can, and do some improvisation, like in order to do that and learn and so like yes, that's security. So like that's what I'm saying. If you're talking about like a lot of like, I am sure that Google and Microsoft and Apple and you name it, like some of that like AI investment is actually AI in cybersecurity. So that's thing one. Um, but yeah, the second part of it is like I do think at a certain point, like you do need AI versus cybersecurity, or like you can only spend so much on cybersecurity. Like at a certain point, you're just getting upsold. Like you can buy the best cybersecurity, you can move your password, blah, blah, blah. But I think that like there's a cap that you can just do best practices where like after that, I do think you're pissing money down the drain a little bit. Um, and like that's not to say that like, there's probably not like another level of cybersecurity that you can keep going up. But the way I always kind of think about cybersecurity is like it needs to like reflect the price. Like it's really funny. Like I would always say, I'm not putting my stuff into LastPass. And like my co-founders would be like, why? Like you like good, blah, blah. And I was like, I don't know. I don't think like I think like there's a lot of stuff in LastPass, and that's a pretty big prize. And like hackers are really, really good. And like the irony of the story is like at some point I just got like sick of doing it and like taking like care of my passwords, and I like proudly announced I was like, okay, you guys win. Like I'm gonna do LastPass, and then they like just like they started laughing and they were just like, George, like LastPass like got hacked. And I was just like, oh God, like see. And it was like right when I finally gave in and they were just like laughing at me. And I did that. But like that's a perfect example of like that's tough calculus for anyone to make, where it's just like, oh, are we like spending enough based on like what it is the reward to hack us? But like I do think that you like have to like it's very easy to be like sold into like limitless cybersecurity, but there is a point where you're just like where it doesn't make sense, where you're spending so much on cybersecurity that like that could also go to like R&D, like building new products, like whatever. And like one of my favorite like ROI stories that I think is really really good, and I think I've told it before, is like Warren Buffett used to like get everybody used to get on him for not giving money to charity, and he's like, leave me alone. Like he was like, I like here's what's gonna happen. I'm gonna keep this money, and I'm going to make a much better return than like and have that much more money than if I gave this to charity. Like and like they spent it. Like if it's in my hands, it's gonna go like 20, like it's gonna go 20x in the next 30 years. Like if it's in that charity's hands, they're gonna spend like 1/20 of it. Like and like that's always one of my favorite Buffett stories because obviously he was right and he did give away his like whole fortune at the end. Um, but like yeah, that's like the no nonsense Buffett that's like amazing that I always like appreciated because he was like 100% right. And that's a little bit like I have and I will continue to give some money to charity, like that I like think, but like that's my similar attitude. Like, but like beyond that, it's like not only do I want to like not only am I going to make a better return than any of those charities, just like amassing, reinvesting it, like all that stuff. Um, I also don't necessarily want to give my money to charities because like my biggest problem with charities is they're all band-aids. Like nobody's fixing the larger problems. Everybody just keeps like putting band-aids on like a pretty like we're like this world is like shooting blood out everywhere and like these charities are like coming on with the band-aids and I'm just like, hey, if we don't do some stuff to like actually stitch up these wounds, like I'm not sure these band-aids are like, they're increasingly like, just kind of like, you're throwing them on and they're like falling right off because there's too much blood. Maybe too gruesome of an analogy, but like, yeah, like I got plans to stitch up some stuff. And like, you'll see, I'm sure sooner or later, I'm going to get the same critique as Buffett. And I'm prepared to say the exact same thing.
Yeah, so I guess we'll transition into your portfolio, but that's so funny that you said it. It made me just think about. Was watching TV this morning, the stock market stuff, and they were talking about how all these drug developers who have made these like weight loss pills or whatever, they're now developing muscle gainer pills because the weight loss drugs have been killing people's muscle mass. So now they're gonna get the people
Oh my
on the weight
God.
loss pills, and then they're gonna get them on the muscle gainer pills. It's just like a
Oh my
cycle that's just
God.
gonna keep going.
It's it's
One pill
it's
after another.
classic. It's classic. Yeah. It's just like, I mean, what the hell are we doing here? What are we doing here, guys? It's just like, yeah.
That's actually a Band-Aid on a Band-Aid. It's 2 Band-Aids on 1 cut.
Yeah. Oh no, and people love to do that. And like, don't get me wrong, like I just like one story that I do tell as I'm like actually like prepping this and pulling everything up is like I used to be of this like pretty big belief that it was just like like, oh, like I'm not doing any band-aid shit. I don't need to like it's great for all you people that work in charity, but like, like you're doing band-aid stuff. And like I'm kind of better than that. And I did think of it like that. I didn't say that. I was never like, oh, I'm better than you charity people. But I did think it. But like just because I like not as people, just because like I'm just like, hey, like I'm working on a real solution here, not like a temporary one. But like I actually like a big break in I would say like both the product development for Prospero, uh, as well as just like my general happiness was uh was actually like working with retail investors one on one. And my mom for years would actually tell me uh like you should like work with you should work with charity or sorry like you should coach like a youth football team or like whatever. And like because she was right, I wasn't necessarily like I was just working on my large solution, toiling away on that. And like honestly like that feels good on a high level, like that I'm like doing something I believe in. But in terms of day-to-day person-to-person interaction, like not really doing much for me. Not anything compared to like the people that I know that like work like in more direct charitable things. Um but yeah, like is what I would say to that is definitely uh that ever since I started working with retail investors on a more one-on-one basis, um that's when I really like started to like be like, oh, like I get this. Like I like, my daily like satisfaction in terms of like actually being able to like help people and teach them on a ground level has been like way different. So like I think I get that like I was thinking of it much more on the sense of like, uh, like I don't get what you're doing, but like I do now. I get it. It's just like feeling better on yourself about yourself on a day in, day out basis. But I have my cake and eat it too now. All right. Let us do the model portfolio. Sharing my screen. I actually like was starting to set it up and being like, oh,
Me
I
too. I got
all right.
Prospero up on my phone.
All right. All right. Yeah, I might need you to get me actually like give me um the current story on uh QQQ and SPY net option center.
QQQ is 43
Staying strong.
and SPY is 49.
Staying strong, pretty strong. Um yeah, we definitely I've been seeing some pretty troubling like we'll see how the 5 is looking. Yeah, it's like evening out a little bit. Oh yeah, the 1 minute we're getting a little better there, but I think I'm still going to be pretty cautious just because I don't really like what I'm seeing. I am going to take a look at IWM and see how different that looks. Um, that is like not looking as like yeah. Let's see the 1 hour. Yeah, IWM is looking better and stronger, but like yeah, okay. Um, we definitely. Oh yeah, I need to look at. uh, General dynamics. Oh wow, that is not looking good. We're definitely getting out of general dynamics. Okay, we need to start making this. I've been thinking about getting out of general dynamics for a while and a little late on that one. I think we actually want one of these like plastic covers. Or maybe this. We want this format. This is good. Mm. All right, exit long, VRTX. Excellent. We're gonna have to get the hell out of there too. Vertex Pharmaceuticals. Oh, that's actually going in the right direction. We're gonna see. See. Um, oh yeah, we're getting out of Vertex too. I mean, we can't be too picky. We need to like start clearing out some of this stuff. Um, I'm doubled up on Chipotle. I think I might want to just like, unless things are looking surprisingly good on Chipotle, I'm probably gonna get out of one or two of those. Yeah. I didn't even know I doubled up, but I think I have a quick win on that, to be honest. All right. Moving right along. Oh, ASML. Oh, Amgen. I think we're probably almost definitely gonna get out of Amgen. I knew I didn't really want to get into Amgen in the first place. I don't know what I was thinking there. You knew you didn't want to be in Amgen, George. We're getting the hell out of Amgen. Got to pare this stuff down. Axon. What's going on with you? I think I'm in Axon twice too. Oh Lord. Yeah. Well, let's look at the 30. We're getting out of Axon. But are we in Axon twice? I think we are. Yeah, we are. Both one of two. All these doubles, like I didn't even know. Yeah, we're getting out of a lot of stuff here. Can you look at the net option sentiment trend on EFX? Tell me what you're seeing.
What's the ticker? ESX?
FX. Oof. CCJ. We got to get the hell out of that.
It's going down right now. It's hitting lower lows in the past. It's at 76 currently. It's kind of neutral though overall.
Um, wow, we're really like taking an axe this long portfolio, but we were loading up. So, can you tell
The
me what's going on
Grinch
with SAIA? Net option sentiment trend.
looking good. It's at 80 right now. Higher lows. Uptrending.
All right, we'll stick with it. MSCI, how are you doing? Oh, you're actually on a decent. Oh, yeah, we're staying in you. Staying MSCI, Boeing, ET, that's fine. IDXX, what's going on with IDXX?
It is uptrending. It's at 85 right now. It actually hits 85. Like that's the cap on net option sentiment it's been, but it's uptrending.
I don't like the technicals, and we
The other
are
thing
we are
is
really taking.
the time
Mhm.
graph and like the chart above show different numbers, so I don't know which one is
The
like
chart above is current. The time graph is probably going to be the last value we're going to have is noon today. Um, so yeah, we care. Yeah, I think when you're
oh
giving me that quote, it's important to like get the updated, and I'm looking at the updated number when I ask you. Um, so SAIA, that actually means it's on the downtrend if it was at 80.
it just
Um,
actually changed. I don't know if it just updated, but it said 64 above and now it says 84. So I don't know if it just updated.
it updates every 3 minutes, Stephen. Of course, it just
No,
updates.
the one of oh yeah, yeah, you're right. I was thinking of the graph below. Yeah,
Yeah, the one above. All right, tell me NFLX, Netflix. Tell me the trend there.
very good.
I think we're what?
Very good. It's like straight up and to the right at 74. This is like the best looking trend
Straight
I've
up
seen
and to
though.
the right. Give me more info on like where it is, where it's going. You need to get better at this. Here, I'll tell you how I would describe it. I'm gonna jump in. I'll tell you how I would describe this trend.
Okay.
So it's on a general uptrend. Yes. I like it. I'm gonna hold on. Except it's except it like might be topping off because it was at 74 at 12:38, but now it's down to 73. So it's kind of losing that trend. And like the technicals are not good, so I'm getting the hell out. I think that's enough. Um, AS, you want to tell me what's going on with ASML? And that. Oh, yeah, I don't like what's going on.
Okay, uptrend, but it was at 75 a couple days ago. Now it's at 73.
Was it at noon?
Um, it was at 74.
Yeah, so we're going down a little bit. Yeah. I think that's a big enough. I think I've taken a big enough hack at these longs. Um, and I need to start wrapping up. So yeah, we can be done. Um, we're gonna close this out. We are going to go back here. And then we gotta fix this. And I think since I think we're gonna do real fast on the shorts because uh, I think we want to like hold on to as many shorts as we can that are not like troublesome shorts. Um, um, I like the freshest numbers. I can't help myself. I need the freshest numbers. Yeah, see, look at how much shorter that list is. We really started to get pretty heavily long, but that's okay. All right, what are we seeing here? Nothing. We looked at that yesterday. I think I want to hold all this. All right, we're gonna look at WE. Like that trend. Yeah. Oh yeah. We're staying in that. GTHX. So looking good. Not great on the 1 hour, but definitely losing momentum. Yeah. Okay. We're keeping in that. Yeah. I mean, I think we just got to add we just got to balance out these shorts a bit. Yeah. All right. I know what I need to do. All right. We're taking an even newer one. Um, I think we actually want to use this. Uh, ability. So what is that? Bro. I think we are probably. Do we have CLH open? I gotta teach you how to do that, Steven. All right. So like what I do like on this, you have access to the model portfolio, I think. So like I have this like set to this. Like I'm gonna go, oh god. I'm gonna go looks. Yeah, we have a CLH open. God, I lost it. Okay. Um, I might start asking you to tell me if we have any open positions at these things. Um, and you just go in and be like, yeah, we have an open position. Basically, I didn't see an exit on CELH. That's how I knew we didn't have an open position. What's
Hmm.
going on here? What's going on? Oh, what's this? Did it in the wrong spot. All right. I don't think we're adding any longs. Like, no, we're just adding. We're just adding shorts. Going to the bottom here. Um, Oh, our old friend GLPG. All right, we got to look at this thing has really screwed us. Oh, maybe it's the right time finally. No, it's probably gonna screw us, but let me look at the 2 hour. All right, we're gonna take another ride on this thing that just has always screwed us. Um, Lazy screwed us too. Got that open. 15. Actually, just gonna do what we normally do, which is it's kind of funny. We actually we already subtracted one. We're gonna add it back. We are doing that. Can you look at how I said? Do we have an open Navi position right now, Stephen?
So how'd you pull up the stock? You just type next to the ticker, the actual ticker,
Control F.
NAVI.
Control F, and then I type in the ticker. And make sure you're looking. We're looking in shorts now
Oh,
for
okay.
now.
Okay, so I see Navi. How do I know if
Is
we?
it an open position? Like if you see an exit day, then it's not an open position.
I don't see an exit day. No, no exit day.
That's what I thought. I thought we probably did. So yeah, it's not. That's not the wrong answer.
Okay.
Oh god, always get screwed on lazy. We're getting back. We're getting back. These are the shorts we like. I don't know if we want to like do two real estate things. No, we don't. Stockyards, man. Never heard. Um, I don't know. Here, I'm just like for um SYBT. I'm looking at the net option sentiment trend. And I like what I see. And I'll tell you, like, so Stephen, like what I saw in SYBT was like I saw like it's getting into a lot of lower lows, kind of. But then if you look at the current value, like we're just like it looks like lower highs. Um, and like I don't necessarily like want to load up on um, too many bank stocks, but we'll see. I'll bail on these. Like yeah, like JHG. I'm probably just like it's probably just like too much. Like I don't want to like I've got too many, and now I'm out.
What about
Um,
with that chart? How like the price is higher than the current trend on the chart? Is that valuable information, or does that not matter?
like what I look for there is actually I'm looking for like if the line is above and crosses over. Um, that's what I care about more. What's the current QQQ and SPY net option sentiment? Actually, before you tell me that, can you tell me if we have an open HUYA position, HUYA?
Yeah,
I thought
as a
so.
short, right?
Yeah, yeah, we're all in shorts now.
Mm-hmm.
One Stone Hotel. No, not good enough. All right, good. I'm glad we did this.
QQQ. You want
Yeah,
those?
QQQ and SPY net option sentiment.
QQQ is 38 and SPY is
Oh
48.
man, it's happening.
The flippening.
SPY is 48.
Yeah.
We are Like, yeah, it's losing it. It is losing it. That's why I'm glad we already started to do this. Got to flip this damn portfolio the other way. Doing that. Ugh. Oh, never mind. We can do it like this. All right. We are going to do this. Oh, I thought. Do this. Do it. How many people do we have in the audience left, Stephen?
We have 8 viewers right now.
I'm looking, if anybody's got any short ideas, I'm looking for more shorts. I'll do them live if anyone's got it. I got 4 more minutes before I have to press send on this.
Please in English and not Russian.
Yeah. Yeah, do the translation on your end. If we don't get anyone, I mean, we're probably gonna cruise in, like, honestly, um, like right on time. But um, current QQQ option sentiment.
On it is at 41. Tomorrow's opening is going to be interesting with such a flip today.
Yeah. All right, that's done. All right, did anyone call out did anyone call out
No.
any?
Yeah, no shorts comments.
They just don't like us. Um, all right, then I will spend my last minute looking at seeing if there's any longs that I want to review. Mm, mm, Do I have 2 SMCIs? No. Oh, what about Disney? I don't look at Disney now. I got rid of Netflix. Disney didn't throw up any red flags. One more minute. Oh, you know what? Well, I have a 4th IWM. Yeah, gonna close one of my IWMs. Take some profit. Okay, now we're gonna press send. I'm going to get the hell out of here. Thanks for watching, everyone.
And Christmas is Monday, so I doubt. I mean, there's no way we're gonna be live. So happy, Merry Christmas to everybody who celebrates
You don't
Christmas.
want
Happy
to do a
holidays.
you don't want to do a Christmas live, Steven?
You want to do unwrapping of gifts?
No,
The
I'm just
markets.
kidding. I think,
There's not going to be a lot of action in
uh,
the markets. Why am I so dark today? I
yeah,
feel like it's so
no, we should
dark.
definitely do we should definitely do a gift unwrapping. We should do a gift unwrapping, or we should just get on and demand people send us things on Amazon
True. I'll
for
make an
for
Amazon wish
everything we've
list.
done. A Festivus. How about a Festivus celebration?
I'm in.
No, just kidding. All right, we're off.
All
Thanks
right.
everyone. All
Thanks
right,
for
bye.
joining.